Welcome everyone to Kickstart webinar number 5, a question and answer session with me, Julia Stuart. I'm Jim's partner here at Jim Dalton Trading. I'm also a student. So today we thought it would be a nice break to absorb all that Jim shared with you and give you the opportunity to ask any questions that you may have, whether it's about where to find content, Jim's approach, or anything else that you're wondering about. So this week you're stuck with me because Jim is in Hawaii until the end of next week, taking a nice break before we have to go full throttle come May 1st. So of course Jim will be back and he'll be available, but for this week and next I'll be the moderator and the presenter. And thank you everyone for being here. It's great to see you all and we appreciate you coming out. At the beginning here it might get a little dicey because I have to monitor the inbox and inevitably people are asking about the password, and I've already got a couple even though I just checked. Let me see. I'll get with it in a minute. Just give me 1 second. Okay. 1 second, everyone. And thank you, everyone, for sending questions ahead of time. I answered them in email, but you're welcome to shoot them back at me if my answer was not sufficient. So I guess we can get started. All right, so I'm just going to go down the questions here, and please type your questions in as you have them in the GoToWebinar interface. I am going to do something for you here. This hasn't been released to everyone. If I can find let's see. There's going to be 2 things coming over to you in the handout section. They're manuals that I have created for both the training site and the member site. So there you go. Give me 1 second. I'm going to make sure you get that. Appreciate your patience with me. Let's try this again. I am uploading one at a time. Give me 1 second. I don't understand. Okay. There's the member site manual for you. And one more coming at you for the training site. Okay. So the manuals I've just placed in the handout section have not been released officially, but I want you to have them. They will be placed at the member site and the training site respectively, and you will receive them via email in the near future. But just so you have those for being here, I want you to have them and be able to get a jump on where to find content. Quickly, why is the Kickstart programs password protected? They're posted on YouTube later. Well, we don't mind that people see them after the fact, but we don't want anyone coming in and making it more difficult for the people who are here and entitled to be here, have more of a problem getting your questions answered. The people that are in this webinar are JD members and Mastery Series traders, who have enrolled in the program. So we want you to have as much attention and get your questions answered during the live session. And yes, we do make it available on YouTube after the fact, but that's why we do it that way. Okay. Could you comment on the markets? I guess we should get right at it. And I'm having a problem opening up to make sure you can see my screen. Okay, you should be able to see my window trader. I did the report last night, and you know, shame on me for not giving you downside references. It was a little rushed. I wanted to recap what had happened and comment on the upside and the destination trade at the opposite end of the range. However, I failed to mark this interesting anomaly here at the 2340 level. This, if you look to the left, is last week's low. It's also an anomalous price level on the profile for Tuesday, April 11th. And clearly we're seeing the market repair or revisit the poor structure we saw yesterday. So we've taken out that anomaly. We currently have an excess low with the E period and F period, you know, 7 minutes in. We'll see what happens. The confidence today, would anybody like to tell me what the confidence is in your estimation? Yes, exactly. Not particularly high, is it? And so, although it's more abstract or ambiguous or subjective market-generated information observation, confidence is a marvelous trade filter and gives you a lot of insight into how you're going to execute your trades, what you're going to hang on for, if you're going to take a trade. So clearly the market is one time frame lower since B period, but it's hesitant at best. We are still rotating and trading inside yesterday's range. We currently have another inside day setting up. So obviously one time framing inside yesterday's range is a different context than one time framing with a breakout of a range inside day. So the confidence here today is lackluster at best. I don't know if that suffices for you for what's coming. I mean, if you wanted to say, okay, end of one auction, potentially the beginning of another, maybe you want to get long. Maybe you think a revisit to the POC and that area above, particularly given the confidence and the stop out, you'd probably not want it to go much lower than a couple of ticks above E period because you'd then have a poor low and certainly wouldn't want to be long in F period with a poor low formed. So you may have to consider the trade busted if it were to come down to that area of E period 2 ticks above the current market low. Give me 1 second. I'm sorry for this, everyone. Okay. Well, everybody's on this. Why low confidence? Well, David, what do you see as the tempo here? Look how slowly it's moving, and look how the market has stutter-stepped as it reaches each, you know, reference. It hovered around the 2340 level before breaking through. And even now, as we start a new auction, because excess marks the beginning of the end of one auction and the beginning of another, it's not like this thing has just made a directional decision and boom, it's off and running upside. Now, it certainly is getting some legs and it's moving, but again, the confidence is questionable at best. All right, we have our Top Gun in here. Thank you for your service. Nice to see you. Let's see. We don't have PDFs for the webinar today because really I just made that opening slide. We're going to, take this as the questions come, so you're not missing out on any PDFs of the slide presentation. Okay, at 12:04 today, the profile is showing a gap between E and F periods. Do you look or expect this gap to be filled in, and hence do you use it as a concept to trade against? I'm not sure what you mean by a gap. We usually use that term, or we always generally use that term for a new day. A gap would be F period, E closing on its low, and F probably through some geopolitical event opening lower and leaving a gap in the E of low to the high of F. So I don't see the gap right now. Maybe you meant to use a different term. Please clarify and I'll come back with you. At what point in the pitch session does Jim stop referencing the overnight trade? Well, that's a great question. Today, overnight trade, let's just mark the settle here. We measure overnight inventory from the settle of the prior pit session. And you could say, there was a slightly short inventory coming into the open today. A majority or much of the trade occurred below the settle. But, not particularly clear or a major consideration. You could call it neutral. As far as when we stop referencing it, well, for one, when the market opened here at 47 and it did not bounce at all and come close to coming into the overnight trade, we would have to say the market is opening weak. And as far as where we're at now at noon hour, the overnight trade really isn't too much of a consideration. When does Jim stop referencing it? Well, sometimes you'll see overnight inventory adjusted like yesterday's trade where we recap that in the report. It was net short, it went up, adjusted that inventory. You could say, well, how do you know it's adjusted? Well, it went up, and that sent the market into another auction to the downside. And at that point, you'd say, okay, overnight inventory was adjusted for now. And you'd go with the current auction. And, I guess you could say, didn't really adjust that much. Maybe there's more to do with it. But when I was looking at the market yesterday morning, really I was more focused on these lows and the weak low that occurred in A period yesterday when it hit Friday's low and bounced, and I was looking for these lows to be taken out. So I wasn't so much focused on overnight inventory as much as I was just staying with the current auction. So that's a long answer to your question. Please come back if you want further elaboration. Let's see. Let me clear some of these off. Can we talk about yesterday's poor high? The fact that it happened late in the last period, does it change anything? That's a great question. No, it does not. We don't tend to say, well, this poor high was made just as the 30-minute bar was changing, and or it was done in the last minutes of the runoff period. We really don't get that granular with the poor high observation. However it happened, we printed a poor high late in the session in the runoff period of the futures market after the cash close at 4 p.m. Eastern, and it stands as a poor high. And it still is a poor high, which clearly affects the odds of downside continuation. Right now we are repairing the poor structure, and it's done a pretty good job of cleaning that up. But this poor high we are carrying forward, that it could be taken out. It could happen today, maybe not happen today, but it's something we're carrying forward, because although it was taken out in the overnight session, that does not count as pit session traders. If we were trading the overnight and we wanted to be trading in this hour and we're looking for it to take it out, which it opened and went higher, actually it went a little bit higher, it repaired it, you certainly can use poor structure as you're trading the overnight. But in terms of pit session trade, that overnight trade that took out the poor high does not count. So that poor structure is still out there, and we are watching that. Obviously that's another reason you could get long if you wanted to. You're an aggressive trader, you're looking for a trade, you see the excess, you see the repair, we're inside a range in low confidence. It's certainly a reversion to the mean or rotational type of day, that putting on that type of trade with a tight stop or pretty tight stop, why not, if that's your style? Could you elaborate on the reasoning for the early morning short yesterday around the 2350 level? Sure can. I assume, Steve, you saw the report yesterday. I don't know about you, but yesterday, look at these lows. Monday low. It's got excess in Monday, but it's weak because it's 2 ticks off of Friday's low. Friday's low is structurally a poor low, 1 tick excess. Not far behind it, Thursday's low. Wednesday, the release of the FOMC minutes, which caused a pretty considerable breakdown. We're still trading in the spike from that breakdown. Not far behind that one. So when A period opens, comes down, I believe it went to the tick at 2347 and bounced. It proceeded up. Okay, overnight inventory was short, so perhaps some of that short inventory, should I say, muted the option to the downside, because the market takes care of current business first. And when it bounced, came through the opening, came up, you would be anticipating a short, because we use the term exponential, which is to say that 1 times 1 poor high, poor low, it's important, but when you add 1 poor low and now you have a weak low from Monday's trade where the low is so close, now you've got 2 poor lows. Well, that's not weighted 1 plus 1. That's a heavier weighting. It's exponential. So it increased the odds of that low not holding. And then to add A period going exactly to Friday's low and bouncing, when the market's going higher, depending on your risk appetite and your trading style, being aggressive or more conservative, on the way up, you could look to get short. Now you could get, Jim had said on the way up he could have gotten short. when I talked to him yesterday morning, I am a little, I would have been a little more hesitant, waited for a high, some fallback, and would have gotten short on the way back down. Now, if that's too aggressive for you, you say, yeah, but how do you know it's done? Well, that's what we're paid for as day traders, to assume risk and give liquidity to the market and make it that much more efficient. So you may not want to get long right up here or in the 50 level. Maybe you wait until it comes back through the open. Of course, there's always that seesaw trade-off between the confirmation of the trade and the trade location you get in at, which more confirmation, more risk. Less confirmation, less risk. So as the market comes back through the open, maybe you want to hit it there. Maybe you wait until it comes back to the early morning low, couple of ticks outside of it, maybe you have a sell stop waiting there. And you get short in anticipation of the firecracker effect. Take out Friday's low, well, that would be 2 ticks below that, takes out Thursday's low, takes out Wednesday's low, and basically we see a period take out, I don't know why that's marked, but a period comes 2 ticks shy of last week's low at 2340. And at that point, B period rotates up higher, 1 tick shy, I think at the time, of Friday low, classic momentum sell, and it drives it back down. Takes out the A low, tags the weekly low, and C period bounces but proceeds lower. Momentum traders are a very dominant group. When they get on, you want to let them play out. You don't want to be stepping in front of a momentum trade. They got their way here in B period, selling close to the Friday low, comes back down, C period barely comes up. I'm going to take that reference off, and breaks out again lower, and that took out by 1 tick 2 weeks ago, the Tuesday, March 28th low. And when you think about it, what a great trade, because C period leaves excess, D period prints inside bar, E period pops above by 1 tick. We usually take an inside bar breakout, depending how you trade, give it 2 ticks. E period fails, comes back in and rotates. Now we have 2 relative inside bars called the E period high to the D period low. F period breaks above E period, and if you had to stop 2 ticks below, above, we had a nice short covering rally. And again, the confidence of the morning, A bounces right off the Friday low, B comes down, it didn't take it out yet, but B comes up to 1 tick shy. You think if a market's that weak, is it really going to come back to these areas, or would it really hold and bounce in A period? So right from the beginning, I'm thinking once this mess is cleaned up with these similar lows, we could be looking at a long trade. Can you explain the rate day rally when we have a gap? Late day rally when we have a gap. I'm not sure. I want to answer your question. Maybe you're considering the gap because you're considering the gap from the settle, which is a more conventional technical gap. Jim considers a gap from the low of the prior pit session. So we didn't have a gap yesterday. But clearly, I think we could understand a late day rally here as simply, what do? They push it, press, push it all the way down and come 1 tick over, take out the low from 2 weeks ago. Well, the low of Tuesday. Monday's low was lower, Monday, the March 27th. And they've clearly, the herd mentality, Markets go from being too long or too short to too long. So basically the rally here is just, I mean, they weren't done yet. The shorts weren't out, and as we balanced, I don't know, maybe on the close or a lot of day traders got flat and you know, closed the market on its highs. Maybe they were market on close orders, I don't know, but basically it's more, I would consider it in the day's structure and not necessarily from the gap. Obviously we had a tone to the upside yesterday afternoon, and really it didn't relent. Can you talk about when to no longer carry forward? We carry structure forward until it's repaired. Once it's taken out, then it goes off the board. So this anomaly at the last week's low, it's repaired. It's off the board. However, we're going to carry forward this poor high from yesterday. And really, if you think about it, we still have a poor high from April 5th, last Wednesday. We're still carrying that forward. So really we carry them forward until they're repaired. And there's a good article number 80 at the premium content page. It's called Forcing Action, but it talks about these prominent points of control, or very prominent, being revisited, and the repair of structure. So you might want to check out Article 80, Forcing Action, as far as repair and how long we carry it forward. Let me just make this a little larger. Oh God, give me a second. I have a bunch of people here who don't have the password. Okay. One second, everyone. I appreciate your patience. I just don't want people to be out. Okay. What is the format of the upcoming intensive? Each day we have a webinar at 9 a.m. Goes till about 10:30 or 11 a.m. Eastern. And in the evening you will receive a recap and preparation report, which recaps the day, furnishes 3 scenarios for the next session, talks about what we're looking for the next session, and then in the morning, before the webinar begins, you get a morning report that encompasses overnight trade and any geopolitical events or announcements that came out. And when we get in the 9 a.m. webinar, Jim shares his perspective, which really reflects the 2 reports you now have and have read. And then he answers questions. And someone might say, well, you know, Jim, you're focusing on the rally high. You didn't mention the POC, and why not? I had that in my narrative and my write-up. And Jim will answer questions like that. And then at 9:30 a.m. Eastern, we, pretty much stay quiet and listen to Jim narrate the open. So this is where you get to kind of look over Jim's shoulder and be mentored, where you're watching him narrate the open, talk about various things he's looking at, start to pull in the scenarios that we had for today from the reports, and we pretty much do that the first hour of trade. In between that time, Jim will take questions as well, and this is what we do 5 days a week. Once we're off the webinar at 10:30 or 11 a.m. Eastern, Jim will move to the chat page, which, if I pull this over, this is the training site, and this chat commentary is where Jim will make comments, time-stamped comments about what he's seeing. Your browser will make a sound, and you can look up and see what Jim wants you to see and point out some important observations. He also takes this time here, he'll use this to answer emails he receives and share the answer with the group. So that's the format, and pretty much you get in course 1 5 weeks of that, and then in between course 1 and course 2 it's a little less hands-on for you because we don't have the webinars, and we may be only doing 1 report a day, but we'll also have the chat, and Jim will be making his morning comments in the chat. So for 5 weeks you take the working knowledge that you learned in course 1 and you start applying it in your own trading with the support of the chat and the reports, and then we start course 2 and we do the same thing as we did in course 1. What's the difference between course 1 and course 2? Really? Nothing. It's an opportunity for you to be exposed to various market situations and have a thoughtful appreciation for the nuances that change depending on the market situation. No 2 market situations are the same, and the more that you can see and be a part of and experience in real time with someone showing you things, you're going to do that much better learning and internalizing and developing your own market logic and your own market perspective. So it's really an immersion model that you're steeped in one market over time, over 100 days really in the both programs, to learn and really evolve and grow. And it's our objective to accelerate your learning curve for something that could take you 2 years to pick up on your own, or catching here or there something. You have the opportunity to learn in a very compressed amount of time what could have taken, realistically, years. So it's always great to hear people in the beginning talk about what they feel and where they're at after the end of course 1 and then at the end of the program. And if your experience is like mine, when I went to my first Jim Dalton seminar in Napa, California in 2009, I said it in the field of vision, I never looked at the markets the same way again. So that's the format, and that's what we're trying to accomplish. And obviously, we want you to do the work too. In the beginning, you may not be able to write your own report, your own narrative, and we want you to keep it brief and to the point and on the resonant information, the most salient market-generated information, and then compare your work. In the beginning, that'll be difficult. You just read along with Jim's. Eventually, maybe by week 3, you're writing your own narrative and comparing your work to Jim's. And by the end of the program, you'll be doing that proficiently. If you're doing it, reading the reports, observing the market, engaging in your trading, applying your knowledge, executing, you're going to be well versed in Jim's trading process and have a much different appreciation for nuances. Yes, this is being recorded. I have a question on placing stops. How large of a stop is needed when we place a trade at a reference point? When placing a trade at reference points, as the market trades to the entry, do you use a stop? And if you do, how large will the stop be? Well, it's interesting to me. I talk with many traders, many professional traders, and I found it odd in the beginning to hear that many of these traders go into their trades at market. And Jim, apart from the options, goes in at market when he's executing futures trades as a general statement. So, for instance, in F period, we talked about getting long with the excess and a weekly low taken out, and the low confidence maybe would take a shot for going higher. Well, where would I place my stop? The stop really depends on the market situation. I had said that I wouldn't want it to take out the E period 2 ticks above. I'd want to keep a good low there. Say you got in at 40.50, a couple of ticks above the weekly low from last week. Well, 38, that's 2.5 handles. That might be more than you're willing to risk. Maybe you say, I don't want it to take out the F period low. It should come out of the week. Should come back into the weekly range, 2340 level, and go. So if it breaks back down below, you may want to get out if it comes if it gets to the low of F period or a tick below. Now you got 6 ticks risk. What we will say about placing stops is Jim is highly just disagrees with a money stop. Well, I'm willing to risk 6 ticks. Well, if we put the trade on and 6 ticks puts you, say I got in at 41.50, I'm a little late on the draw, and you say, well, I'll take a 6 tick risk, well, that will put you right back to the weekly low. And frankly, it might work from your money management perspective, but it doesn't respect the market. The market doesn't care what we care to, risk. So always our stops need to be based on structural information, not on a money stop. If you do have a money stop and it's 6 ticks, well, heck, you want to get in as close. You might not even wait for it to come back above. You see F rotating higher, you got to stick to that risk, and you need to have a structural place. You might have to put it on, maybe right at 2340, maybe a couple of ticks below it, because you only want to risk 6 ticks and a structural risk point at 2338, knowing that's where the trade is busted. That's where you got to get in. So I hope that helps, but there is no, right now, let's just take the market where it is right now. G period, we've got an F period inside bar, okay? We can take a breakout of F period inside bar. Now, G period came within 1 tick of that. The buyers really have something to prove here. The fact that it comes back down to 1 tick above F period low, it speaks to the confidence of this market, right? The buyers, they're against 1 time framing lower. The sellers, they're with the auction, but confidence certainly isn't working in their direction. So for this inside bar in F period, say G period starts to slide. Say it comes below the F period low. Well, if you feel like I think is more downside. I think we can get to the low of yesterday's low, or we got some room here. I'm going to take a breakout of F period. 2 ticks below, say you got in at 38.75. Well, monitor for continuation. A, you don't want to see it come back above the 23.40 level, right? So you'd have to nix the trade back inside the F period range. B, if you get in the trade and it starts continuing, well, clearly the day's low, want to see it get there. Want to see it continue in range extension down to yesterday's low. But again, you know, playing a breakout of an inside bar, which is just a little wider inside bar, you know, and playing a breakout to the downside, you know, it's really not a great odds play because we're pretty wide up here, right? We got a POC that's pretty wide, got 4 price levels here in the 42.50 down to 41.75 area. You know, it's going to take some oomph to move this market out of range. And you know what I wrote in the report last night, this is a holiday week. Traders are dropping off. Kids are off from school, you know, a break for the Passover, for Easter. So, you know, what we're seeing is pretty typical of a holiday week. It's also typical of what we'll see trading inside of a prior day's range. So a breakout to the downside, you know, you could try it, but you have to be respectful of the structure and the confidence that this is not the stuff. With the confidence, the tempo, the structure, the inside of yesterday's range, that's not the stuff that a breakout trade is made of. How do you use time, say references or entering in on a bar? Does volume play a part for you? Okay, so G period, before I answer that, we're inside of F period's range. This market's like moving through peanut butter. I tend to give a little more value or weight to the noontime lunch hour than Jim does. You're not here to hear my opinion of the market, but pretty slow moving market here. So I guess at the same time, if you were still long in F and it's holding its own, or if you decide to get long again above the 23.40 level because it can't break through, it is an option for you with a destination at least to half back. This was not the half back in E period when it was, the E came one tick shy. It only became half back after E's range extension. But you could play for back to half back, back to the point of control. And where's your stop? Well, I would say probably you got to have it pretty tight outside. You wouldn't want it to, I would probably have my stop right below F period low. Of course, it's getting away from us here, but if you wanted to play the long and say these traders are not getting anything on the downside, you can do that. Now, back to the question, how do you use time? Say references or entering in on a bar, does volume play a part? Volume is but one data point among many. So right here we see all white in F period. Okay, so definitely as a surrounding data point to add, you know, credence to the long or to add confirmation, clearly lower prices were cutting off selling activity, which is the expected result. That, Paul, by the way, is the exact same mirror opposite on the upside. That higher prices, the expected result, cuts off buying activity. So you can lean on the volume here, but really you're primarily leaning on the 23.40 reference. and the low confidence and an anticipated rotation with the excess low and the start of a new auction back higher. Personally, these low confidence markets do not work for me. I do not like to get involved in these, and that's just my style, and I know who I am and I know my style, and they don't do a lot for me. I find them very difficult. You know, to sit there and watch a trade long and wonder, you know, there's nothing there for me. So I would be waiting for something to change. Breakout of the F period high, that could be interesting because that might trigger some shorts covering and some people entering the auction. We do have the repair of yesterday. Low can't even come close to yesterday's low, and we still got the poor high from yesterday hanging out there. But right now I wouldn't be interested. Does Jim pay any attention to average true range, pivot points, R1, floor pivots, etc.? No, he does not. I want to stress that Jim's process can overlay your own trading process quite well. For instance, if you like to use floor pivots, well, Jim's process we're not asking you to jettison what you do. We're just providing another layer of context and more depth to your market perspective. So if those things are working for you, then certainly if you could incorporate Jim's work into your own methodology, certainly many traders do that. Jim's a purist. He does not use those, though. Does the one time framing indicate higher confidence today? Well, that's a good question. I guess, you know, one time framing is one time framing. We are one time framing lower. Even with the F period inside bar, the fact that one time framing lower, the F did not take out the E period high, so we are technically still one time framing lower. But that doesn't it doesn't disregard that it is low confidence. So they're really two separate observations, John. You know, yes, we're continuing lower. We need to be aware of the one-time framing lower. And any long we take, recognize that that long should work pretty quick because we're fighting the trend. And I don't mean trend in terms of a trend day, but we're certainly, right now, the longs have something to prove. And the shorts are trying like heck to keep it going, but with not a lot of success. So we've seen the point of control migrate lower on window trader. The gold D here is the dynamic point of control, which is to say that that's where the point of control was as of D period. Yeah, and right now I can't say F period. I think we migrated lower when we went 5 wide in G period. So the point of control has dropped with 11 minutes left in the G period bar. So really the auction is still to the downside. You know, the POC is migrating lower with one time framing, albeit with low confidence inside of yesterday's range. Would you carry forward the low from yesterday as a clear double bottom? It sounds like you do. The low from yesterday, I guess you could call it a retest failure when D period tried to get back down to it. But no, I would just leave it as it's a good low. It has, what, 5 ticks of excess, 6 ticks of excess? So it's a good low, and I'd leave it at that. One could consider it a weak low because it came within 2 weeks ago, Tuesday's low. We still have the excess low from Monday, the 27th, when we gapped lower on the open and proceeded to fill the gap. And all that week, it just went higher and higher. But, you know, it did come to a tick within that, but I don't know if I would weight that too much. You know, I would leave it as it's a good low with a poor high. Let me come down to questions that are just being asked. So you mentioned today's B period going to Friday's poor low. A period already repaired that level. I meant B period yesterday, Bill. I meant B period during yesterday's auction. You are correct. A was that all those lows have been repaired. Yesterday, the afternoon pullback low at 23.42 quarter was at half back. Short-term traders buying at exactness. Then you had a poor low at the end. One increases the odds for pullback while the other reduces it. How do you weigh the contradictions in terms of prioritizing? I would think that, let's split this out. You don't want to look, I mean, we could look at infinite data points. So is this a pullback low? I guess you could consider it a pullback low, but really it wasn't trending higher in the afternoon. This low came in after it was balance, balance, balance. You know, K kicked higher, L comes on, kicks lower, you know, but we're still balancing. So this is not as, I guess you could call it a pullback low, but it's not really. A pullback low is when we're one time framing higher and the market pulls back in one session to adjust inventory and then marches in the prevailing trend direction. This doesn't really qualify. And I don't know what you mean by at half back, you know, the poor low at the other end. I don't know if there's not really a poor low. When L period came down here, we leave it pretty simple and say, yep, anomaly, you know, exactly at the week's low. And basically, like I said, I should have put more to the downside in the report. It was a little rushed last night. But really, the repair of this structure, that's where we'd leave it for the F period. Not necessarily calling it a pullback low, but just that it left an anomaly in a structural area of weakness. Okay, F period, G has broken out of F period here. Okay, so what did I say? If you wanted to take the breakout, not the stuff of a breakout trade with the, you know, point of control now 5 wide and the confidence the way it is, I can't really say I would do that trade. But if you wanted to, you certainly don't want to see it get back inside F period range. Little tug of war going on here, but say you got short and you're at 23.3875 short. Okay? Well, you don't want it to go back to 23.40. You know, you really want it to hold and go. When we take a breakout trade, we want that thing to go. That's why sometimes it's tough, because people say, well, if I take the breakout, then it comes back in range and, you know, I got stopped out. Well, that's a decision you have to make. You either A, wait for it to come back in and maybe get a better fill, or when it comes back out, or B, you risk missing the trade entirely. So say you were short, right? 23.3875, 2 ticks outside of F period. Okay, you got your stop at 23.40. What's that? 23.40 quarter. Really? You know, you want this thing to go, and in the confidence, it hasn't shifted yet. That's not to say that you're not short and you say, well, I'm willing to try it. I think it's weak. We're still one time framing lower with the breakout of an inside bar. I'm going for it. But, you know, you're going to have to monitor that pretty tightly, and you really want to see it stay outside of F period. You certainly want to see it stay below the 23.40 level. And again, now we're monitoring for continuation. You want to see it take this E period low, and you want to see where it can go down here, where can it get back to yesterday's pit low. Okay? And Dan, if you need further elaboration on that question, we can always talk about that. And that goes for everyone. If you You know, if there's something I'm answering and it's just not working for you, it's not resonating, you know, my phone is open, our email, and you know, we want your questions to be answered. Okay, it left 2 ticks of excess. It stalled right at the, why do I made that line because it was the excess line. That's not a relevant line. But G period again, this speaks to when you take a breakout trade in a low confidence environment at lunchtime, no less, inside of yesterday's range. It's really kind of painful, isn't it? That's why I don't do these types of trades. But other people are more patient than me, and they're willing to hang in there and see if we can't get another leg to the downside and range extension. But it does still hold a 2-tick excess. Again, 5 wide on the POC, another variable observation that it makes it that much tougher to pull away from a 5 wide POC like this. But maybe you're still hanging in there. Say you got 23.70, 38.75. Maybe more aggressive trader. When it came back in below 23.40, you took it a little higher. You know, this is where, well, where do I put my stop, Julia? I don't know. If I was short, I really wouldn't want it to go back above 23.40. But it's making you work for it if you're short right now. But the trade hasn't busted yet if you had a good stop in. Would you please offer guidance to your referencing of levels that have already been repaired? Well, when we look at this profile from yesterday, anomaly, the 3 wide here, 5 wide anomaly, those have been repaired. That structure has been repaired. Now, whether the auction continues to just go lower, but really it's those levels are off the board. Clearly, I'm holding the 2340 because it's a weekly low. You know, I'm keeping that reference on my radar. We're back inside F. Really, if you're a nimble trader and you're not married to your positions, you know, this G period, when it couldn't take out E period, you know, and you knew the confidence wasn't on your side, you could nix the trade for a couple of ticks. Or maybe you just break even and get out when it comes to your break even. We're not supposed to use break even stops. It's along the lines of the money management stop. Break even means nothing to the market. Sure, you didn't lose any money, but did it really make sense from the market price level, you know, from the structure there? I mean, really, that's when you see it can't take out E, it's struggling. You say, not today. I tried. You maybe get out with a couple of ticks, or you let it come back and take you out at break even. I hope that makes sense to people. And Bill, I hope that answered your question with the levels that have been repaired. Let me know. I won't have Window Trader up all day. The webinar will end up being hours long. I can't do that. You know, the webinar will be open till we complete, and then it needs to go. I need to, you know, spool the recording and, you know, keep it so people can watch it. It's not 4 or 5 hours to the close. I'm sorry, I can't do that, and I have to use the webinar software after for a couple of calls with people. Okay, thanks. Why there is a reference at 2340, it's last week's low. Okay, it's last week's low that was taken out on Tuesday. It's also an anomaly that has been repaired from yesterday's profile. But I'm leaving it up because it's 2340. It's a weekly low, and the market's obviously hovering around it. I feel like it's still a relevant reference. I mean, I don't know about you, but the shorts are trying to push it, and they aren't having a lot of success. So this should be interesting. You know, sometimes you want to step in front and say, I think they're done. I think they're struggling. But, you know, momentum traders are powerful, and they're the dominant group. And sometimes you just got to let them have their way. Nothing saying H period couldn't come down, take out the low, and find, you know, probe lower, and then it's over. You know, it's tough to say. I don't particularly like trading at this time of day with this type of confidence. Let me come back up and I'll get some recent ones here. I use Thinkorswim market profile and don't see as much as your profile is showing. I am using Window Trader Blue, not Blue Light. Blue Light doesn't have the volume. It also doesn't have the replay. That's my understanding of it. So, you know, you won't get the volume. I think that's the only difference. Oil just stopped one time framing lower. Are you putting stock in that? You know, we tend to look at the oil market and the dollar when they're at extremes. What is crude? It's slash. You know, I can't really say that crude is affecting the auction today. Maybe it is. But I wouldn't be monitoring crude like that and saying it stopped one time framing lower. Maybe it is a signal that the the mini S&P is going to go higher now. But I think that just using the profile for the S&P, you know, could do the trick, and not necessarily looking at 30-minute one time framing on the crude trying to make trades on the ES off of that. I think that gets a little precarious. I have light and I have some volume. Okay, I don't want to answer questions for Window Trader and, you know, give you bad information. So please inquire to Window Trader what is the difference between light and full version. I've been using Window Trader since 2009. They didn't have a light version. I also paid handsomely for it, but it's an excellent tool. Excellent tool. So I'm not real familiar with light. Thanks for the symbol. Is there a potential firecracker trade developing in the H period? Yeah, well, you know, yes. Certainly if we stop one time framing lower and it takes out G, sometimes it's a blip up, stops in one time framing, adjusts inventory, and goes lower. But certainly G, F, E. Now say you say, well, I'm willing to take a shot, you know, I'm willing to get in. Maybe you want to take a long here. Say you can, I want to do it real time, but you know, you'd have to get in at 41.25 on the offer. You'd have to have your stop outside of the 40 level. And maybe you can see, you know, we're going to see a cessation of one time framing. This is a retest failure. G couldn't take out E, so right there, that was a good technical indication that the low couldn't take out the low. So you could, it certainly could be something. But again, you're 6 wide here too. So we'll see what the market can get going if it takes out, stops one time framing, if they can, get a short covering rally underway. I mean, clearly, as I said earlier, the shorts are trying real hard to press this thing, and they're not getting a lot for it. Okay, thanks, Leo. Is there potential? Okay, so the firecracker, there certainly is. I agree on your market confidence assessment. Would you see that the increasing New York Stock Exchange volume as a confirmation or just a nuance? Oh, you guys challenge me. Thank you for the question. So the New York Stock Exchange volume, this is at the training site. You also have it at the member site. Let's see. Okay, we are higher, but yesterday was 3.098 billion. Monday was 2.7, very low volume. So we're higher, but you could, it's hard to use the volume on a 30-minute basis as confirmation because we really haven't shown much direction. We like to use the volume when we're looking at direction to confirm the move. We've been really balancing here. So the last hour and a half of volume, I mean, you could make the case that volume's coming into the market and, the auction to the downside is over, and using volume that's building up to get long, as a long confirmation. But really, when we don't have direction, the volume isn't as important. So what did we say? We could have gotten in at, what was it, 41 quarter when we talked about getting long. Again, you're waiting for this thing. But if it does break above G, then F, it could get some legs to the upside. God knows they've pressed it as low as they can. Okay, so here's your typical. It goes up, and if you had a buy stop in there, you're in. Lucky you. Or you say, geez, I think this could go somewhere, and you want to get long. The problem is that we're now 6 wide. So it's going to take some gusto to move this thing out of range, up and away from the point of control. And, sometimes we see one-time framing stop for a couple, a period just to adjust it, and then it continues back down. Right here, one-time framing has technically stopped in H period. So right now, can you feel that the shorts, the people who are trying to press this lower, might be feeling a little heat right now? You think? Yes. The nice volume is on the member site also. And I will go there. I'll show it to you. Interesting though. So stopped one time framing and we're going higher. So if you did get in a 41 quarter, you're looking okay. Took a little heat, nothing major. Premium content takes you to this page to make sure you're logged in. And this is the premium content page for JD members. Signature Trades worksheet. your 2 checklists, and nice volume. Okay, so you can see it here as well. And you can download this cute little Excel sheet that'll give you the data in 30-minute bars from 2003 to 2012. So either way, you can have it. I know some traders in here aren't in the Mastery Series, so you would definitely want to go to the JD members site, the premium content page, and then click on the nice volume button, and you can get it there. Yes, and you can get volume at Yahoo too. Thanks, Joe. I don't know how to take that. Yeah, at Yahoo it is, let me do this, hattv.n@yahoo.com. So if you're not a member, you know, I hate to do this, but I just have to look at this inbox. Okay, where can I find Wade? Hold on. Oh boy. You can find market news for the day at that same site. Here, news for the week, using Econo Day. Okay, so that's what I clicked, news for the week at the premium content page. And at the training site, on the dashboard page, there's a lot of good stuff. So you can see it in your manual, but the trader tools, some fabulous resources to get you acclimated quickly, and news this week under market resources. Okay, there's a couple areas you can get that news very quickly. I would have made a good floor trader, huh, Joe? Oh, God help me. Okay, can you talk about your thought process of the first 3 half-hour periods today? In other words, what are you seeing, thinking, your interpretation, etc.? Okay. Today, I had a lot to do. It's difficult to run the business, answer questions, spend time with traders, and watch the markets. So what I'm going to tell you is in hindsight, okay? I want to make that clear. But I'd love to hear some other traders. If you were trading it this morning, what did you see? We opened at 23.47, back inside the established range, okay? And I don't know. I don't know if it went down first or went back up. And I'm sorry, Paul, I'm not trying to dodge your question. I mean, I will tell you this, okay? We opened close to the point of control in the center of the where the majority of trade, the fat part of the profile from yesterday. So I wouldn't be jumping all over the open to try to get in something. I would be focused on the poor high, and I would be knowing and focused on the downside to the poor structure. Clearly the 44 level that we've been using for this range that we closed back inside the range, well, now we open still in range but closer to the edge of the 44 level, 44 quarter level. I guess when the market comes down, I wish I knew how this happened, but you know, it looks like it came outside of range and then B period open and it ramped up again. Am I getting this right? B period took out A period. I mean, really, do you want to be involved in a market in the first 3 periods, A period 23.40.50 to 49.50. After the first hour, you got a 6-handle range. We know that's not likely to hold, but it speaks to opening in, the fat part of yesterday's profile where the majority of trade took place. Wouldn't be jumping on a trade for sure. And I suppose C period, opens and it breaks below A and B, but I can't even tell you I would have been on a trade there. I guess you could use the 44 level and say, she's coming back outside of range. What did you say? What? C put in a poor low, and I took the short at that point, got out an E period near the low. It was totally painful, so labored. Good for you. Okay, so C printed with A and must have bounced. Okay, well, that's great. So if you had a poor low and it bounced off of it to get you some good location and put the trade on, there's an idea. And to get out an E period, that's good for you. That's some patience. That's good. So Paul, I'm trying to address your question, but not seeing it live. I know my answer is leaving something. This is why Window Trader with replaying a day can be fabulous. Or Sierra Chart, I think Investor RT. Many platforms let you replay the day. Hold on. I'll get those to you, Steve, the manuals, okay, after. I haven't posted them at the sites, and I will. Now, Melody, you asked a question, so let's get to this on the email. How do we know we have a poor high or the poor high is too high? Sometimes I think learning and starting out, we tend to get a little too specific and detailed. We know we have a poor high or a poor low when we have less than 2 ticks of excess. 1 tick of excess gives it a poor high designation. Okay, that's simple. If we have a large value area in the previous session, the next day's session starts inside the value area. Now is the move usually from high to low value area to the other side of value area of the previous day. We don't use the value area edges like here. This value area needs to be adjusted, but I don't want to do it on this is too light. But it's basically from the anomalous 2340 weekly low, last week's low level, up to here. We're opening in the center of the value area or close to the center. So we're not saying, oh, it's going to go to the other edge of value or the top of value. We're really just getting a sense of where is value developing today. We have slightly overlapping to lower value, marginally so. So you don't necessarily need to use the value area edges for reference points. You can, in the back of your head, have it there. We know markets are very visual, and we know the majority of traders don't use market profile. So what's more relevant than this value area edge on the high is the high of the day. Everybody knows the high of the day, And, the value area low, well, you could say it's the value area low, but it's also the weekly low and, the anomalous structural low, but structural price level here from F period. But we're just using value to assess where are we trading relative to yesterday's value. And we don't get too specific. Now, I think that Peter Resnicek uses value edges, value area edges more, and he does great work. So it could be that, you can lean on those levels to place trades or get out of trades. Really, it's something personal, and if that's how you like to see it, or you're seeing a lot of, over a large sample size, that it's relevant, definitely Do what you feel led to do. Up to what point you look at the today's session and previous days reference lines, and when will you begin to bring your focus mostly on the current session? Well, we're still keeping yesterday's low as an area of interest, so that's going to stay pretty much throughout the day. You know, right now it's not so much on our radar because it's a little far away. We're focusing on today's low. You'll notice H period came within a tick of half back. You know, not a particularly strong high that traders were selling right off of half back or a tick lower. So that's certainly suspect. And you'll know from the high red light reel this weekend, H period came up and tagged the half back and went lower. And that was a turning point for Jim, recognizing that something had changed. That weak high suggested that we were going to come back at that. The market had been selling off, and we used April, help me, was it April 5th? No, I'm sorry, I did the highlight reel and I can't remember, but this is a suspect high, okay, a tick shy of half back. So if you got long, it sure didn't help you out too much, but you know, could that be you know, come back at? Sure thing, it could. You know, we're widening out with the POC here. Now, it's always helpful to visualize. We have 7 minutes, click, 7 minutes left till the next period starts to print. Ask yourself, what would it take to make the point of control go higher or lower? We're only 4 wide up here. We're 6 wide down here. So it sure would, it's going to take quite a bit to move it higher at this point. And if we're trading around here in 7 and 6.5 minutes when I period starts, well, that's only going to widen out if I period prints there. So clearly the market has found an area where two-sided trade can occur. And the wider this gets, the lower the odds are that we see something substantial, you know, move away from it. I'm not saying that it can't, but we're talking odds. Yes, and thanks for sharing that. Can't remember. Thanks for sharing that trade from C period this morning. I didn't know it printed a week low. So where would you look to make a first trade, even in hindsight? Well, if C period printed a poor low, say it matched B, Paula, can you come back at me since you took that trade? C period printed poor low with B. Thank you. Okay, so if C period prints a poor low and it bounces, okay, you can be looking for that poor low, well, that matching low. It still had 2 ticks of excess with A period, but if you're feeling the auction is heavy, you could put a trade out looking for that low to be taken out. I want to call it a weak low, not a poor low, because structurally A period up to C period had a 2-tick A period excess if it matched the B period low. But, you know, she's been with us quite a while. Quite a while, and so she's a little more versed, and she was willing to take that trade. I took the short on the bounce and C. Okay, great, and that's a personal trading style, but obviously it worked for you. You did have excess on the high with the B period, and C period's, you know, starting to go lower. You get the matching lows. It bounces. You feel like it's weak. You can, you know, you're feeling that the high is put in. Remember, Jim says the high or low is often put in the first hour of the day, sometimes the first 30 minutes or 90 minutes, I guess you could give it, but that's in Mind Over Markets from 27 years ago now. Yeah, you know it, week low. I hope that helps, Paul. But, you know, when you're trading in the fat part of yesterday's profile with the low confidence, there's no shame in not taking a trade. If there's one thing I've learned from talking to professional traders, they don't feel any pressure and they don't feel bad when the market goes up 10 points and they're not in it. If it's not their trade, it's not their trade. If they didn't have the odds on their side or they didn't like where they had to put their stop, they're not taking it and they're not lamenting it either. They're patiently waiting for the trade to come to them. And I think that's a wonderful thing that Jim talks about. It's really, I mean, I'm a type A, you know, if you know me, and I don't have a lot of tolerance for mistakes. And it's something that trading has humbled me and taught me that if I miss a trade, so what? I miss a trade. Because the longer I hold on to that frustration, the further away from success on that day I find myself experiencing. Because when we're frustrated about missing a trade, now where our vision is obscured, to just let it go. You know, it's obscured to see current opportunities because we're too, you know, busy grousing about missing an opportunity that I had written out on my narrative that I had prepared for, and I froze at the time of entry when I should have executed. But if there's one thing I see in professional traders or retail traders that are very successful is, you know what? They literally don't care. They forgive it themselves. They just move on. Move on. They let it go. I swear they could like rear end you at a stoplight and go, oh, sorry, see ya. That's the end of it. Hey, I'm sorry. Yeah, here's my insurance info. If you got a problem, there you go. And they let it go. I made a mistake. Big deal. I'm human. And I think that's a wonderful, it can be annoying when you see people doing that and you know it's a struggle for you, but everybody has something to teach us. And I really see the power of letting go and staying present. The power of now. Stay in the now. I took the E-period trade with the stop inside IB. Could you, that couldn't be initial balance. I took the oh, I see. So you took the E-period short when it failed to come into the first hour of range. Nice. With the anomalies and prior week pit low in mind, but exited the short as the volume did dry up at E's low. That's fabulous. Yeah, I mean, that's one thing. We're all trading because we don't, you know, we want to be autonomous. We want to try our hand at doing something very different than most people. And we're creative and we're autonomous and we're not followers. So that's a great trade. I mean, that's great. E period comes up to inside the A period low. This is something I did a lot trading. I mean, I haven't traded that much since we've started this program, but that A period low, and it's the hours low, it is a great reference for a day trader. And that's pretty good. Good for you. Get short there, watch the volume dry up. Yep, had enough. Confidence isn't telling you this is going to be the big trade, and you get out. Okay, we have just started printing I period. Again, what's it going to take to move the point of control? This is going to have to go 7 wide down here because closest to the center of the range, the widest point, this point of control is not moving. It can go lower if I prints next to H here. at the 2341.75 level, but that's all it's going to do in this period that it can do. So we're looking at a very low confidence day, holiday week. Yes, the volume's higher than Monday and Tuesday, but Monday and Tuesday had low volume, and a widening point of control trading inside of yesterday's not only range but primarily value area. So this is this is typical, and this is the power, I think, of what Jim does, because we're not looking at moving averages and pivots and oscillators, and we're just recognizing that our 8-year-old nephew could do. Wow, we're trading inside yesterday's range. Wow, this market really doesn't have much tempo or confidence to it. I wonder if I should be in this, this market today. Maybe I'm just going to study this afternoon or read while I watch the auction and wait for something to set up. It's not rocket science. Yes, there are a lot of moving parts, but there are some very basic observations that you can use to get anchored in the day beyond many of your competitors with some simple observations. And it goes a long way. It did for me coming on board. Well, reading Jim's book 10 years ago, that definitely gave me a different perspective. And then, going to a seminar. When playing rotational days, do you pay attention to the 45-degree line being developed at this time? Well, you could make the case that there is a 45 line. I think that's actually a pretty astute observation, because traders are selling below value. They're selling, well, at the edge of value, but they're selling below a prominent point of control. Think about it. F period comes down, comes back up and prints to make the point of control wider, or revisits it. G period, it might have gone down, but it makes its way up, prints at the point of control. H period, we watched it, it broke out, came higher, leaves a suspect high, 1.5 ticks from, or 2 ticks from the half back, prints at the point of control, comes back down, higher low now. I period, higher low. So is there an argument to be made that shorts are getting trapped or are in the process of getting trapped? Yeah. Usually though, with the 45 line, you want to see more rotation. When you have a 45 line, you're usually seeing more range extension with the point of control well up and above it, or on the upside below it. Right here, this range extension, and it's not the most perfect example of a 45 line, because usually you've got a little more volatility, little more tempo, and a little more directional conviction, pulling the market away from the POC, popping it back up, printing there, push it back down again. We know how these traders are. They keep selling. Traders do what works until it doesn't work anymore. Selling has worked for them today, and they're going to keep doing it until it doesn't work anymore. So it's a muted 45 line, but certainly having the H fail at the G and these sellers, and now the I failing at the H, yeah. It's not the most perfect example of a 45 line, but the sellers are trying really hard here and not getting much success. And we held the excess low too. I know people that enter on retest failures like this on the G period, and they do that a lot. It's not unusual for the S&Ps to come up in F period and then take it back down just to shake the tree and make sure you're real committed. They don't make it easy for us, and it failed. We had an RTF here at G period. And H period can't take out G. I is now higher. So it will be interesting to see. H period, definitely looking at that as a weak high suspect. And The question is, well, if I get long and I do believe that the shorts are getting trapped and I get long, where do I place my stop, right? Because sometimes people ask me, well, can I get long here? Well, where are you going to put your stop? And is that in your risk profile? Is that in your rule set of what you consider reasonable risk for your account size and your experience level and the upside potential of the individual trade? So I would think you certainly would want to hold the H period low because the 40 level is a nice level. It's been holding today. So if you wanted to try and think this market's overdone on the short side, certainly could do that. But, you know, right now we are balancing for coming on 2 hours and 6 minutes. E, F, G, H, one big balance, an hour and a half inside E. So it's kind of like flip a coin, 50-50, with low confidence. Is that a trade you want to enter into? An RTF is a retest failure. You put in the low, the market bounces, the diabolical S&Ps come back down, test the low. A retest failure. It cannot take it out. That's all it is, and it is not a Jim Dalton term. I just talked to many traders and I've heard that used. You're welcome, Carlos. Can others who are learning comment on this as well if you think it's relevant? The how to see the morning trade, Paul? No. That's my kitty. Sorry. Shh. Oh, I see. Would you rid yourself of all charts except the TPO to help focus on the principles you and Jim discuss? I would recommend that. I'm not one to tell people what to do, but if you're looking at 5-minute candles and you're following along with stuff that obviously didn't work, if you want to, well, maybe it did work, but you want to improve your system or your methodology. But if you're looking at 5 and 2-minute bars and tick charts and, you know, all of these things, I mean, is it reasonable to expect your mind to be able to focus on the profile? You know, I know a guy, he's a professional trader, and he says, I put it in a drawer. He said, I don't tell myself I can't use it anymore, but I put it in a drawer and I leave it alone. I take it off my charts and I focus on the profile and I focus on what I'm doing, you know, what I'm using now. And I don't have to feel the pain of, oh, I don't have that indicator anymore. I just put it in a drawer. Very successful day trader, professional. So I would recommend it. You could try it and see how it feels. I think it would be easier to learn the process since you're just starting out. Okay, so Carlos, your 45 line estimation, which is basically saying the market traders were getting short. I period has now gone, nice job on that, Carlos. I period is now taken half back to the tick and revisited the H period high. So looks like shorts might be in a little trouble here. They're feeling it. They're feeling it. And they were feeling it since G period, right? F period, they felt it. G period, maybe some more piled on. Couldn't take out E. H period, what the heck, let's try it again. Maybe they got short up near half back. I period can't take the low. Ooh. So what we could be witnessing right here is a short covering rally unfolding. Again, with a 7 wide POC and a 7 wide price level below it, you know, the odds of this thing just snapping out and busting away, that definitely lowers the odds, and the overall confidence of the day lowers the odds. But when people are emotional and they're caught short and they're covering and scrambling, it's like, I always love on the airplane when they tell you, please note the exit might be right behind you. As if you even get lucky enough to try and exit out of that plane, you're going to be thinking calmly. And that's where we say, oh, these shorts, they could be in big trouble. And that's why short covering rallies and long liquidation breaks can be violent and rapid, because you are witnessing pure human fear. Get me out, right? Oh my God. You know, they waited and waited, and now they're in trouble. So not only are the shorts covering and adding bids to the market, but you also have people on the sidelines. They smell blood. They see what's going on, and they start jumping in and bidding the market. So, you know, this is very interesting. So I guess if you were long down here and you hung in there, which you could have, the trade didn't break necessarily. It was not a bad long there, waiting patiently, or you got in an I period when it couldn't take out H low, and you felt the 45 line. In other words, you felt the shorts were trapping themselves, selling, selling, selling. Not a bad little day trade. And you had to wait very patiently for that to set up. Yeah, they were holding the previous week low. That was a good reference. Yeah, using Jim's process is like having another pair of glasses. You know, you can maintain what you do, but you can get a bigger picture perspective and see things more from a human participation perspective, rather than with pivots and lines and oscillators. Wow. I didn't see that, Bill. Wow. Okay, let me see here. The person who took the short in E, and actually a woman is asking it, and she's assuming it's a guy, but it's another woman in the class. We have a good amount of women, I think, because of the way we look at things. The woman who took the short in E, when it couldn't get back into the initial balance, that is interesting. Is that a signature trade for this person, if I may ask? Well, I think the first hour's range is often used, and when you see the E period come back toward the edge of the first hour, it wasn't half back then. You know, that can, it's definitely you got a tight stop back inside range, and yeah, I've used that, and I don't think it's a signature trade. It's not a signature trade, but it's just recognizing trade that as it's a very dynamic reference. It develops in the first hour, and when you see this situation setting up where we've traded lower and it opens close to it, you got good trade location, you got a tight stop inside of the AB period there, and you've got some nice downside potential. I am watching the market, but a half hour after this webinar, I'm talking with someone and another person wants to talk. So, it's not my primary function at J. Dalton Trading. Jim handles the content, and I handle, making sure everybody has what they need. and you know, spending time with people. Let me see. I'm struggling to understand what dynamic references of the overnight session have impact during the pit session. Do we care about excess, poor, high, low? Oh shoot, she left. I'm going to answer this question and email her. She just said she had to jump off. The overnight, what we basically use is the high, the low. Is it net short or net long relative to the settle of the prior pit, and half back. And when you have these very prominent points of control, this actually, I've seen them much longer in the overnight, they can factor into, because it spent a lot of time there. But we're not using poor lows in the overnight or structure in the overnight like we are in the pit. We keep it simple. High, low, half back, and the inventory position. Is it net long or net short relative to the settle? Um, here's a question I'll put out there. I currently do not have a market profile platform. Do you recommend subscribing to the Window Trader Blue prior to May 1st? I get questions like this. Do I need Blue to take the program? And I'm going to go quickly to the member site, and I'm going to answer this with the underlying philosophy. What market profile platform you use, and I'm going to resources, market profile platforms, is a very personal decision. You do not need Window Trader Blue to participate in the Mastery program or apply Jim's approach. It's an excellent tool, but it's outside the budget of many people, or some people. So you can use, we list all of these. Investor RT, excellent platform. If you're with Interactive Brokers, maybe a few brokers I don't know about, you can get it, I think, with data through Interactive Brokers for, I don't know, I guess I want to say $100 a month, but that's a couple of years ago now. Ninja Trader Pro Suite. If you use Ninja Trader, you like the software, you got the feed through through a broker for free, you can add Pro Suite. This guy, Bernard LaRouche, is a client of ours, but he's been developing this market profile software with Ninja Trader for years, and he does a lot of work incorporating Jim's work. So that's a great option for you if you already have Ninja. Sierra Chart, again, a lower cost solution. And Thinkorswim, it's free with your TD account. Leaves a little to be desired, but we have many traders that use monkey bars and make it work. Okay, so I've used Blue. It was called Window Trader then since 2009. It was a lot for me at the time, but I felt like I needed a really good tool, that the markets were hard enough and I didn't want to have to struggle with the platform that wasn't giving me what I needed. There are more options today than there were in 2009, but that's one way of looking at it. It's not the correct way, it's just my personal opinion. I want the best tools to do the job. But other people say, look, I don't want to spend a lot of money. I want to keep this business cost under control. And if I can do it with a platform that gets the job done, you know, I can drive to work in a Buick. I don't need a caddy, you know. or if you Europeans, you know, you can get there in a Volkswagen Passat and you don't need the BMW, you know, then that's where you come from, and that's your philosophy about your market profile solution. You know, we're always putting out money. Trust me, I've been doing this since January 1997. I got my first futures email solicitation. Okay, they didn't use email then. It was all paper, snail mail, and you know, there's so many ways to approach your trading and the business end of it. And one important thing is capital preservation. That's in your risk of each trade you take, and it's also in how you splay out money every month for the things you need. And if your budget doesn't allow for Window Trader Blue, it doesn't allow, and that's the end of that. And you can find an alternate platform that'll get the job done for you. It doesn't preclude you from participating in the Mastery Series. It doesn't get in the way of you being able to use Profile. You know, hey, well, you know, maybe, you know, I'd like to drive, I guess, a Beamer 7 Series would be kind of nice, or maybe even a Tesla. But, you know, until that day comes, it's not like we can't get where we need to go using something different. So I hope that sizes that up and that answers your question. But please go to resources, market profile platforms, and you will have links. These are all linked. So actually I got to get rid, that's the same one. But there's many options for you. Okay, and let's go back and look. Okay, oh, this market's fun, isn't it? So the 2344 level, the prior range, trading range we were using prior to yesterday's breakdown, it acted as a speed bump for the I period probe higher. Who knows, it could come back through it. But again, is it a surprise when we're 7 wide in the fat part of the profile here, 7 wide, and the confidence is what it is and it's a holiday week? Not too surprising. But hey, if you tried a long, maybe you got long down by this 2340 level, 41 quarter, wherever we talked about, you know, not a bad trade. The problem is you don't want to get married to it and press it too much, because on a day like today, like I said in the beginning of the webinar, confidence is an excellent trade filter. It can really help you have realistic expectations of being in a trade or whether to even take a trade. So, you know, if it can't get back up through the 44 level, maybe you want to let the trade go, or if you trade size, you can take some off and you know, bag some profits and leave some run. See if you can get something. One second here. Yes, Sierra Chart is a pretty inexpensive platform. I have built profile on Excel as well. I still have it. I used to do that. I used to build my profile by hand using a 30-minute bar and typing them in and then pasting, copying and pasting and creating a collapsed profile along with the 30-minute periods. Yeah, Toss Monkey Bars does give volume. You know, I took it off the resources page. Let me, I don't want to, we have a toss, how to build a toss. Let me just I have to publish this thing. I had it under resources, but it felt like it was a little much. Let me move this over in case I show users or something. There is a post how to build monkey bars, and I'm going to put it back on the resources page, and you can check that out. I believe it does have volume. And you can use your dome or your trade, the ladder, and look at the volume at price. It's not on the same screen. Posts. Hold on, I'm going to put this under resources. Well, I don't want to take too much time, but we have a post, how to build monkey bars. And thought I had it right here. Okay. This post, I'm going to place it back underneath the resources, but this is a post that a trader gave us. It's a silent video and a link to a help file and a panel. So I'm going to add that back to under resources. It'll be one of these drop downs, okay, after the webinar. And you can use that, but I'm not sure. I think it does have volume histograms. I know there's toss traders. Let me know. I think it does have histograms. How important is it to read current pit session inventory? I talked to a crude trader. He left the floor and got trained by Jim a long time ago so he could be at home. He was kind of settling down, starting a family, wanted to trade from home. And very successful floor trader in the crude pit, but also one of the few that could transition to screen trading. And he said, all day trading is inventory going from one extreme to the other and recognizing it. So, how important is the ability to read current inventory? It's really important. Someone commented on the 45 line forming down here. They could feel that traders were getting short and not getting much for it, and they were probably setting themselves up to get trapped. So, it's one observation, but it's important. But you can read it through structure and volume. Clearly the volume is drying up here. You can read it through one time framing. The weak high in H, look, these shorts are hurting. When H came one tick shy and they sold it again, you can read that as, that looks nice. That's a nice upside reference. It tells me this market could be turning. And so there's many ways to come about understanding inventory, but certainly important. And it's interesting, isn't it? So it hovered here, took out the half back, came back inside, and we're finally seeing the short inventory adjustment. They've really trapped themselves here. They really tried hard for a long time to push this thing lower. I think I answered that. Overlap. rightfully, can you talk about when no longer to carry forward? And I answered that. Does the futures order flow go through market makers as equities do, or are they solely electronically matched? It's a great question. As far as I know, it's not like the islands they used to have in stocks and different exchanges or areas to clear or match up. It's just electronically traded through the exchange, the Chicago Merc, with the S&Ps and all the stock indices, except the Russell is on the ICE exchange. If I'm giving bad information and someone knows the answer to that, I'm not too proud or to admit that I just understand it that there's nowhere it clears. It just clears through the electronic matching bids and offers at the Merc. So that's my answer, but please help me out if that's not correct. I've never heard of Bookmap. Bookmap is a great way of viewing the live auction process and where liquidity is. Well, thank you for that. You all can search Bookmap, but I did not know about that. I clear through IB. Do you have a preference? No, I don't have a preference. I had an IB account. I opened TD. I mean, the way I see interactive brokers, they're definitely the least expensive, and you don't get a lot of fluff with it and features and bells and whistles, but they let, if you're an international trader, TD hassles the Brits and they don't let them have futures accounts overseas. Interactive brokers, they work across the world, excellent platform, you know, definitely a great broker, but they don't have a lot of fluff. You go and they're less money, they're less per trade, but you go to TD, you pay more per trade, your execution goes like to Nebraska before it comes back to the exchange in Chicago to be filled, but they give you a lot of free stuff. So it really depends. Again, I defer to personal preference, and their charting capability and all that. So I see. They're not, so TD isn't licensed for futures in their own country. That's why they don't. Yeah, in Canada, I guess anywhere outside the US, you can't use TD to trade futures. So right there, you're going to jump over to IB and no worries. I see. You got bad fills with IB. Okay. Let's see here, everyone. We're coming up on 2 hours. We're past 2 hours, but I want to make sure. Yes, it is. I was talking about Marty, the floor trader, the crude floor trader who went to screens. Okay, thank you, David. So the histograms, they have histograms. It's always nice to see the text figures. And someone's saying for the Thinkorswim, she uses the dome for the volume. So you can see the volume histograms with figures right on your price ladder. It's not on your profile chart, but you can make it work. It's free. It's included. Okay, I think I'm getting to the end of questions. The nice volume that we put on the site comes from the New York Stock Exchange floor. It's the total volume of all shares traded, and very simple metric, just all the shares that are traded. And I know there's a million symbols for different nice volume and it gets confusing, but that's why we created the page at our site, and we had some fellow JD members that are technically savvy that were willing to do that for fellow traders. So we took them up on the offer. Now, Jim, I see one question here, and maybe we can start wrapping up with this. Could you comment on your use of value? Meaning, if value is higher or lower, how does that affect your thinking about your trading? Well, like I say, you know, values like your GPS, I mean, it really keeps you anchored in what's going on. And, you know, clearly, in a day like yesterday, when you've got clearly lower value, that may right there put you on the short side of trades and taking them off on breaks. But if we could, you know, that's a very general statement, because, you know, here yesterday, in my opinion, once it took out these lows, and these lows really fueled a nice breakdown. And, you know, we got a nice short off of that breakout of the Friday low and the early morning Tuesday low. But, you know, even though value is clearly lower, I try not to have it handcuff me and say, well, I can't take long trades. You know, right, I would be staying current with the auction and go, look at that inside bar. Pops it set above, closes back inside the range. Now you've got this nice inside bar. You've got an excess low, and, you know, you can see they've been pressing on this thing, and it may be done. And when F period comes above, I would have been on that, without a doubt. I would have been on the short, and I would have been on this. I would have taken a buy stop, had it placed right above, 2 ticks outside of the E period high. So, you know, value I use as a benchmark, but it doesn't, you know, tell me I can't take a trade against it depending on the current situation. Okay, so J and I periods highs, would you say that's suspect? I would. You know, right below the open, matching 30-minute bars. You think that the auction's over yet? Doesn't seem so. Now, I guess I don't want to sound cocky or like a know-it-all that I think it's coming back through there, but I do find that interesting, and I do find that a vulnerable weak high. And you know, I don't know if it's done on the upside just yet. So clearly, if it filled in on the profile and smoothed some of this out. Let's see here, J, we have 20 minutes left, but the point of control could go higher. In K period, it would go 7 wide, and it would be closer to the center of the range, so we could have the point of control migrate higher. Of course, we got 20 minutes left, but clearly if J can fill this in, this profile starts to smooth out a little bit. And really, it just speaks to a low confidence rotational day inside of yesterday's range, and really value in a holiday week. Okay, so how are we doing out there? Is there any pressing, burning question that I haven't answered for you that you would like answered before we sign off? What is the clock software? I'll tell you. Atomic clock. And I tend to get time and adjust it. It goes to the world clock. I'm sure there's a ton of them out there, but this is atomic clock. And I tend to do that. There's some things we can control, so I try to keep it together. Do the things that I can, like keeping my clock at the same time. Anomalies. Well, I'll quickly go over anomalies. You're saying anomalies, so I assume, Jeffrey, you'd like a little elaboration. Anomalies. Okay. Well, the anomalies from yesterday, you see the sticking out here, right, at the 23.42 quarter. Another anomaly just because it bumps in, 23.40.50. And this anomaly here at the 23.40 level, you see how it sticks out? Just not a smooth profile. And they were repaired today. Now today, what do we have? This is an anomalous POC, right? It's not particularly smooth, sticks out. This is anomalous to have, go from 2 wide to 4 wide. Wouldn't, focus too much and weight that too heavily. But clearly this is anomalous in here, 6 wide. Look at the J. Look at just how this profile looks. You go from 6 wide to 4 wide. So anomalies are structural weaknesses in the profile that suggest emotional trading, forcing action, such as short covering or long liquidation. And we record anomalies. I didn't mention the poor structure above here. It's not an anomaly, but just like the poor high, we record them because they can be great downside or upside references, and anticipate that they will be repaired. Okay? Anomaly is when pullbacks go too deep into a previous area of two-sided trade. Yes, that's one way to say it. Right. Is it any mystery that the anomaly is also at the weekly low? Clearly a very visual reference. The profile just depicts it a little differently as an anomaly, which you wouldn't see on the candles or the bars. So, do you ever use volume in the current period as shown by the blue profile? Yes, I may. If I'm looking to get into a trade, I can get a little more specific volume for entry on the current volume histogram. I can't say I lean on it too heavily, but if you're on the edges, it can help. It can certainly help. So I hope that helps you, Dave. It's not a primary consideration for a trade, but if I'm at the edge of a high or a low and I'm looking to put it on and I see there's 29, like this has what, 29 contracts on the high, and I was looking to short, say it was at yesterday's pit high or an overnight high, that can give me more confidence to execute. But what does Jim say? Everything is a series of facts surrounded by other circumstances. So what may be important in one instance, I may not be looking at volume at the current bar as heavily, weighting it as heavily. There seems to be a poor high IJ period in the market right now, but if you look closely at 1-minute bars, for example, you'd see that it is coincidence. The high happened between 1 p.m. 59 and 2 p.m. exactly. Would you consider this as a valid poor high? I'm glad you brought that up. We said earlier in the webinar that, we don't pay too much attention. Like someone asked, oh, well, end period, it was in the runoff at the very end. It printed a poor high. You know what? It printed a poor high. End of story. Doesn't matter how it happened. And here, I wouldn't call this a poor high because we consider poor structural highs at the edges. This is a poor high. 1 tick excess. This is a good high. Today, 3 tick excess. This is a weak high because it's matching a prior 30-minute bar. So yes, I would, and it's also right at the open. So, it looks vulnerable, to come back at it. However, we're very wide here. In 14 minutes, we could print a point of control smack in the middle with 7 wide below, 7 wide, near the center of the range. So nothing says that the market has to come back up here. This is the type of trading we see in a low confidence inside of yesterday's range environment, and leave it at that. Okay, I'll make a last comment. We'll share the comment with the group here. He just put it in. In my opinion, the most difficult element of Jim's teaching is market logic. Sometimes structure from different methodologies works. Sometimes some higher power logic prevails, and it is difficult to make anything of the market behavior by just looking at the market profile or the charts, footprints, or domes. And I would agree with you because market logic is, when we're doing it well, we are able to weight various observations appropriately. And for instance, if you've been with us for any amount of time, and I think in the field of vision, Jim talks about ruling reason. And sometimes you could have 5 things on a list that are negative for a trade, but you have 1 thing on a list that's positive for the trade. But guess what? That 1 thing overrules. It is the ruling reason that would make the trade, that you would go with that 1 reason beyond the other 5. And it is difficult. I concur. I agree. I empathize that there are many moving parts, and it's just like a pilot. I said to someone yesterday, you don't become a captain of American Airlines until you have 20,000 hours. Why? Because in those 20,000 hours, he has gone through so many nuances and so many issues and little things here and there and in this situation and that, and he has the experience level to entitle him or to be responsible for hundreds of souls on an airline, and it's the same in the market. It takes time, to become a trader that can incorporate all this information. That's why we have the Mastery Series, so that you can be a part of looking over Jim's shoulder day in and day out with reporting and chat, and start to internalize your own information, your own knowledge, so that your market logic begins to happen for you, and the pathways in your mind and the synapses and the connections that your brain puts together over time. You will have the market logic that, sure, there's times that you won't understand or you're not sure about what's going on, and that's another signature of a successful professional trader. If they don't know what's going on or they don't like the market, they feel no pressure to put a trade on. There's no shame in saying, I don't understand this, I don't feel comfortable with this, I don't want to risk my hard-earned dollars playing in this market. That's a sign of maturity, when you can pass on a trade because it doesn't meet your criteria. or you don't feel comfortable, and you don't feel like you have to prove yourself or compete with the market and feel this underlying pressure, you have the maturity to say, no, not today. No. You know? So I hope that helps. But I do want to, validate your comment, and you're right. It's very difficult. And no one trade is ever the same. And that's a fact. There is never an identical trade in the market. There's different buyers, there's different sellers, there's different price levels and surrounding circumstances, different geopolitical climate. So it's a lot to navigate. And that's why in the mastery program, you can go through many different types of market environments and situations. And you might not do it right one day, but guess what? As long as you learn, it's not in vain. It's not something to beat yourself up about. Oh, God, I just didn't weigh that. Those weak lows, I didn't see it. But you know what? You just record it and give yourself a break. Thank yourself for working so hard. And the next time, you might size it up right. There are no mistakes, they say. We're just learning experiences, some more painful than others. So, okay, I'm going to wrap it up here. I very much appreciate you all being here and listening and asking such great questions. We appreciate you very much, and we're very glad you're here and taking part in what we do and giving us the opportunity to share Jim's work, because we couldn't do it without you. So thank you very much. And we will have our next report on Sunday, coming out from Monday Trade. And we'll have our next Kickstart webinar. We may keep it next Wednesday. And at noontime. That way our international traders aren't put out. It's not an ungodly hour for our European friends. And we'll announce that webinar in the report email that will come out on Sunday. And really, please stay in touch with us. And if you have any questions or you're struggling with something, we are here to help. And we want you to get it. It does take individual attention at times. So please reach out to us. If you're now 3 weeks up, we're coming 3.5 weeks to the mastery start, and you're still feeling behind the 8 ball, have a lot of gaps, you may want to contemplate the field of vision. Okay, and we offered a while back to do that. You get a 15% discount as if you bought them at the same time, so you would not be paying full price for the field of vision. It's in everybody's interest that you have that and watch it. So if there's anything you need, please call me or email us, and we'd love to talk with you. Okay? So that's all I have, and thank you, everyone. You've been great. You're so gracious to me. Such a sweet bunch of people, and so glad you're a part of it. And we will be back with you next week, and we are here in between. So have a good afternoon, evening, morning, wherever you're at, and God be with you. Okay? So long, everyone. Bye-bye.